Super League, don't you want me? It's Radio 2's Jeremy Vine Show, and you're very welcome. It's your money and your life. And we're discussing the house price crash, as some people refer to it, as if it's already happening. In Britain, property isn't just a roof over our heads. It's a passport to financial security, a security some people think is at serious risk. In the late 80s, Britain was plunged into a house price crash. 17 years later, the economic situation looks worryingly similar to some. House price inflation is at unprecedented levels, and with it we are borrowing money we simply can't pay back. This afternoon we will look at the possibility that the housing market will crash, and crash soon. I'm joined by BBC Business correspondent Greg Wood. Greg, hi to you.
Hi, Jeremy.
Remind us of the history first and what exactly triggered the 80s crash.
Well, it was really high interest rates which led to a recession and a very big rise in unemployment. And also the Chancellor at the time, Nigel Lawson, added this rather peculiar twist to the whole thing, which turned a downturn into a slump. You may remember we used to have something called mortgage interest relief. You used to get tax relief on your mortgage repayments up to £30,000. And if you were living with somebody who wasn't your spouse, then you used to get double mortgage interest relief up to £60,000. Now, £60,000 in the late 80s was a pretty reasonable price for a house, and it was a fairly substantial mortgage. So this was a massive government subsidy, if you like, to buy houses. Now, in his budget in March of 1988, Nigel Lawson decided to abolish double mortgage interest relief, but he said that wouldn't happen until the August of that year. So people had a 4 or 5 month window in which to take advantage of this subsidy, and they really did. They bought property in unprecedented quantities, over 2 million transactions in 1988, which is still a record. And as a result, house price inflation went through the roof. In October of 1988, houses were rising at a rate of 34% on an annual basis, something that's never been seen since, even in the boom we've had over the past 2 or 3 years. Now, of course, that caused more general inflation, because when people are moving house, they buy new kitchens, new furniture, or whatever. Inflation was rising towards 10%, and therefore interest rates had to go up. And I think that something that people forget is that in late 89 and late 1990, for a period of 12 months, interest rates stood at 15%, something we just don't see these days. That caused a recession, and in a recession, companies go bust, they lay people off, unemployment rose very sharply towards 3 million, and it's unemployment that's the real killer in this situation. There are 3 things that force people to sell their house: death, divorce, and redundancy. Now, the first 2 these days are more or less constant. Redundancy is a great variable, unemployment, and it was that massive increase in unemployment that meant that people couldn't afford their repayments. They just handed their keys in. We had that great negative equity crisis where the value of property fell below the amount of money that people had actually borrowed on their mortgages, and that caused house prices between 89 and 1995 to fall by 12%.
Now, you reminded me that I bought a house in 88 in that stampede, so it's a very painful memory, and I bought it for 80,000 and I sold it 4 years later for 60,000. So I lost £100 every week I was there. And I know you feel that things are different now, Greg, and that the economics of the situation is different, unemployment and so on is different. But we are in a similar stampede situation at the moment, aren't we, where every house that goes up for sale, there's 50 people going to have a look at it.
Of course, that is the case, because we have a limited supply of housing in this country. We don't really build very many houses. We have a growing population, largely thanks to immigration. We also have the fragmentation of the family, so we have more people living alone. So there is this terrific demand for housing, and the rented sector really can't cope with the number of people who want to acquire a property of their own. And of course, people look backwards when they look at an investment. They say, well, it's done very well over the past 15 or so years, so therefore I'm going to make money out of it as well. So you're right. There is a stampede. However, there are important differences. Look at interest rates. We squeal these days when interest rates rise to 5.5%. Well, compared with 15%, I mean, that's a walk in the park, isn't it? And if you look at the level of unemployment, we pretty much have full employment in this country at the moment, and not really much prospect that there's going to be any sort of economic shock that's going to lead to a very big rise in unemployment. Now, that is the vital factor. It may be difficult, painful for you to repay your mortgage if your interest rates are going up, but provided you stay in work, you've at least got a fighting chance of paying off your mortgage.
Thank you very much indeed. Greg Wood, BBC business correspondent. Now we speak to somebody who is a chartered financial planner and a spokesperson for a website which is getting lots of people on it called housepricecrash.co.uk. Jonathan Davis, welcome to you.
Good afternoon, Jeremy.
What was it that, I don't know if your microphone's on actually, I'm not sure. We'll try and sort that out. Tell us what was it that made people set this website up?
Well, I imagine BBC aren't trying to silence me.
Hang on, I think we have a microphone problem. You may have to sit round this side of the table. Why don't you try that mic over there?
Testing.
Hang on, are we there?
1, 2.
Okay, well, okay.
Excellent.
Have a seat. You can sit down and use it, and it might even stay working. All right, so, Jonathan Davis, housepricecrash.co.uk. Tell us why there's going to be one.
There's going to be a crash because of the three reasons why we've had a bubble. They're all reversing now. One, as economists will tell us, we've had incredible liquidity. You could borrow whatever you wanted. If you could fog a mirror, you could borrow umpteen times your income. Interest rates over the last couple of decades have, of course, been falling significantly, right down indeed to 3.5% by 2003, and that, of course, made the cost of borrowing come right down. And then finally, we've had this new phenomenon, the buy-to-letter. Do you know, before 1996, you couldn't even get a buy-to-let mortgage, and yet, since in the last 8 years, the number of buy-to-let mortgages has increased 30-fold. Now, all of those three causes for the bubble are now reversing. The buy-to-letters have finally realised that it's uneconomic to continue doing what they're doing. They're in vain hoping for further capital gains. Well, I just don't believe it's going to happen. And we know they're massively subsidising their tenants on a monthly basis. Interest rates, of course, are rising and will continue to do so.
But Greg pointed out 5% playing 15% from the last time it crashed. That's a big difference.
It's a huge difference. Of course, we're looking at roughly a third in the interest rate, but the amount that people borrow is 3 times. So actually, there's no difference at all. And finally, the liquidity issue, we've seen it already in the United States. The banks are starting to slow down how much they're prepared to lend, and we're even seeing it in the UK. HSBC in the last 2 weeks said you could borrow 95%, now you can borrow 90% of the value. So the credit crunch is also coming.
Right, but even so, we do have big differences again with the 80s, with full employment, with the fact that we're not expecting economic shocks. We haven't got the equivalent of the Lawson withdrawing the double interest tax relief.
Who's not expecting economic shocks? If you look at the United States, where the mortgage and house price bubble is crashing round their ears. Last year, their economic growth was at 5%. It's now down to 1.5%. They could easily fall into recession, and of course that's the biggest economy in the world. We've got oil, which has risen $50 to $70 this year alone, and it could go further. We've got global inflation is absolutely out of the bag. So, for example, food is up 10% a year now. The Bank of England are at great pains to say, we're going to keep inflation at 2%. Well, I'd like to see them really make a stab at it.
What about the argument that we've got 60 million people living in a very small country, we've got more and more people trying to get into this country, and therefore we have a shortage of property, and so there is always a problem of supply and demand?
I'm actually not convinced there's a problem of supply and demand. In the last few years, the demand has primarily come from buy-to-letters. Frankly, people who are economically illiterate, who don't understand the economics of buying any asset. So when the buy-to-letters stop buying, you'll soon see the supply of property go through the roof. And you compare the size of our economy with a similar microeconomy, Florida. Well, anyone who knows anything will know that the Florida house market is going through the floor, and they have a similar landmass to ourselves. Interesting.
Jonathan Davis, stay with us with your working microphone. His website is housepricecrash.co.uk. Lots of people going on it at the moment, apparently, to find out what exactly is going to happen in the next few months. Talk to a property investor who disagrees next. Last night I nearly died, and the microphone did as well. We've repaired it. Gavin Davidson joins us. He is a property investor, and the website is propertyinvestmentmarket.com. Is that right, David? Gavin?
Gavin,
yes. Jonathan Davis is with us still. Jonathan Davis, Gavin Davidson. Right. So, you guys are on only one of you is going to be right. That's the thing, and we don't know which one. Gavin, what do you think? It's going to keep going?
Well, I think there's no reason why it shouldn't. Property is still a fantastic investment, mindful of the fact that 70% of residential investors are in fact home owners. They don't have to pay capital gains tax on their investment. They effectively pay no income tax on the benefit they derive from their own home. And, of course, we all love our homes, don't we?
Yes, but some of them now have borrowed vast amounts, predicating that on the increase they expect in the price of their property, and it surely can't go on forever.
Well, markets go up and down. They don't go on forever. I don't think we're into a bubble situation. Bubbles are very rare. In my 30 years of property dealing, I've only ever seen one, which was the one you described earlier on in 88 and 89. And that was not caused by interest rates. That was caused by the fear of people losing their jobs. And although a relatively small proportion of people actually did lose their jobs, the fear of it for those in employment and earning money was enough to say, darling, let's stop buying, and the market froze.
Jonathan, the thing as well about the late 80s is that nobody, from what I remember, predicted the house price crash of the late 80s. A crash is something you don't predict, isn't it?
I'm afraid I have to disagree with you. There are many commentators, respected individuals, Schiller from Yale University, Morgan Stanley, American Express, Professor Andrew Oswald.
Well, Andrew Oswald got it massively wrong, didn't he? He said about 30% drop up about 3 years ago.
His timing may be wrong, but which I accept. But
timing is everything with this, isn't it? No,
I disagree. Again, timing is not everything. It's a 10 to 20 year cycle, and the cycle started in 1994-95. We're now 2007. We're say 12 years later. The time is right. The economic fundamentals are right, as I said earlier.
Gavin, do you ever wake up and think you might be wrong about this whole thing and your whole portfolio is going to fall through the floor?
I don't worry now any more than I do worry at any time. There's always the slightest possibility. But as I say, it's extremely rare for a major crash like in 1988. And I think you're right. I think Jonathan's right. You can normally see it, but it starts with jobs. It starts with commercial prosperity, and when people start to lose jobs, that's when they're worried. And there's no sign of it.
I went on the internet because I was interested in this subject and looked for a book on it, and there was a book called How to Avoid the Coming Crash. So I bought it off one of the internet bookshops, and it came to me, and as soon as I opened it, I realized I bought the wrong book because it's about America. Yeah. And this book was written a year ago, and you know what? It's happened.
Yeah.
It's happened. And they didn't have a massive job shakeout there, did they?
Well, I think you have to... America's a very, very different market. It's different because supply is almost limitless. It's not like Europe. It's not like Northern Europe where we have nuclear cities, where we have tight controls on planning. I worked in America for a few years, worked on the commercial side, and I knew that we had to hold on to our tenants because if we didn't...
They would ring you on the phone.
They would ring me on the phone and tell me I was wrong. But
get him on the air.
The situation...
Hang on, you deal with your phone. Jonathan, you carry on.
I'd like to comment on the supply issue. The planning restrictions may be tight, but you take Spain, for example, which is experiencing a crash right now. Last year they built 800,000 dwellings. That's more than Germany, France and Italy combined. That's what I call over-speculation on an enormous scale. In Ireland we're already seeing prices 10% down from last year. There's been a global house price bubble, and it gives me no pleasure to say it, but there will be a global house price crash.
Gavin, the argument about, we're dense and we're crowded was also used in Japan, and that one is the house price crash to end all house price crashes, isn't it? Because it happened in 91 and it still hasn't recovered.
Yes, I mean, that again starts with economy. I mean, it starts with economics. And so, what you have to look is every situation, across the globe it's probably different. We were just talking about Spain earlier on. I mean, it is a massive supply that has caused the problem in Spain. And the other thing that one has to remember is its discretionary purchases. I mean, the worst effective places in Spain are holiday homes. You don't have to live in a holiday home. You know, it's a question of luxury and additional money that you spend to buy. It's not a place where you live. In London, we've had a huge influx of people, not just people from Eastern Europe mending the roads or doing the plumbing. If you walk around the city today, half the people in the city seem to be well-paid people from Paris.
You mean the financial district?
Financial district. And all these people have to have somewhere to live.
OK, let's hear from John Powell, who's on the line from Felixstowe. Hi, John.
Good afternoon, Jeremy.
You were scorched in the last crash.
But I survived. And I would just like to say there's a little bit of self-fulfilling prophecy here from the people who are predicting the crash. Things are different insofar as we do have a lot less supply of houses. I concur with the experts there. But and there's a cautionary note to put here about Florida, which was mentioned. Florida went down in the 1920s and didn't even come up until the 1980s, so that's something to think about. I personally feel that house prices are going to remain static because, quite simply, people want houses, but they can't afford to buy them. So they're going to barter the price down, which is what you do. I mean, you will set a price of, say, 120,000 and be prepared to take a 12 grand drop on it. That's not,
Jonathan, that's not a crash.
Well, it sounds to me that that's exactly saying that house prices are going to fall because people will barter and prices will fall. No, I don't see 10% being a crash. I see that as a correction. I don't believe it will be limited to 10%.
I disagree with you. And I would say to you, sir, that there might be the possibility that you could turn out to be one of the vultures that was hanging around snapping up all the properties that were going when people had to walk out and leave the keys back in the early 90s.
And what's wrong with that?
I'm not saying, well, perhaps it's a slur on your character, but, I mean, there are going to be people out there who will be the vultures, and vultures are necessary for the ecology, but there will people out there who would want there to be a price crash because they can get money relatively cheaply now, especially cheap in comparison with the early 90s.
OK, John, thank you, because Claire Inslee's got other reasons for wanting a house price crash. You're in Paignton, Claire.
Hello there. Yeah.
Hi, and you are, like so many people, just waiting and hoping.
Absolutely, and indeed it's interesting about your last caller there because my parents actually got their house there because of the house price crash last time. They were also in the position that they just couldn't afford a mortgage, no way, and they were in rented accommodation, and then the house price crash went, and they were able to get one of the ex-council houses.
And are you a first-time buyer then?
First-time waiter to buy.
Not even that, yeah. You're on the... we should have a word for that. People who aren't first-time buyers yet, but would hope to be.
Yeah, absolutely. In fact, I'm actually thinking of emigrating to New Zealand in the hope of actually being able to have property there, because I don't see me being able at the moment to even think about getting property here.
New Zealand's got an even bigger bubble than the UK.
Canada's got a bubble
maybe I'll
as well.
just buy a houseboat then.
Gavin, what would you say?
I would say you're not silly to wait.
Yeah.
I don't imagine that, certainly in the southeast, property prices will continue to race ahead at this level. I think if anybody is waiting for a big crash, they may find themselves waiting for a long time and be disappointed.
Mm. Well, I live in the southwest, and we also have the compounded problem of people buying second homes. So not only is there a lack of housing anyway, but the housing that is there is being taken by people that have already got somewhere to live.
Is Paignton Seaside? It is, isn't it?
It is, yeah.
Yeah, and I've been hearing there's places in Cornwall where it's like Butlins, where a third of the houses on the seafront are unoccupied most of the year.
Yep, that's right. We've got a similar situation here. In fact, sometimes you can actually rent places quite cheap over the winter, and then you get kicked out over summer.
Thanks, Claire, very much indeed. Good luck with it.
Okay, thank you.
Leslie Johnson in Romford has called. Crash makes it sound like a complete disaster, but I think people are looking at this the wrong way. House prices may return to normality. People like me will be able to afford to buy one. Andy Coward in Peterborough says people mustn't panic if there's a crash. As long as you keep hold of your house, you'll be all right in the end. Kevin Hoff in Church Gresley in South Derbyshire has called as well. I live in the East Midlands in a very nice area. The 4-bedroom house across the road from me has been on sale for 10 months. I don't buy this garbage about there being a housing boom, 50 people viewing one house. This is a very southeast view, and we should remember, Gavin, there are not just one market in this country, there's about 50.
Absolutely. I suspect a lot of people in the country would listen to this programme scratching their heads and wondering what we're talking about. This is a southeast London phenomenon. It spreads across to the south, but once you're the Midlands and the north, leaving out places like Northern Ireland and Scotland, really the growth is very modest and has been for about 18 months.
Shaking his head vigorously here.
I'm really not sure why you can leave out Northern Ireland and Scotland. Are they not part of the United Kingdom? It's very interesting we bring the issue of Northern Ireland up because in the last year, according to the Nationwide, Northern Ireland prices have risen 50%. Now, I can tell you, gentlemen, that is the reason why the national average is still showing 8, 9, 10% growth. Take away that growth in Northern Ireland, and it will happen this year, I'm pretty sure of that, then it will stop skewing the national average. In certain regions of the country, we're already seeing minus figures year on year and also small single-digit growths.
Fascinating. But then they did a sort of a London one recently, and they looked at different council areas, and they were all showing 10-15% rise on last year.
London and Northern Ireland are the only two regions of the country still showing double digits.
OK, Rupert in Chiswick says he's in West London. The house crash has been delayed by the influx of immigrants. They act as a buffer for the housing market, superficially holding it up. But there will be a price crash. It will be this autumn. It will be worse than any previous ones. Well, we may not be able to reach a conclusion on this here. It's probably best that we don't. But, Gavin, last thought from you. You're going to keep investing, right?
We're going to keep investing because in the long run, property is a fantastic investment and it really can't be bettered for the average individual.
In the long run, yes, but maybe not this year to next year.
Undulations, of course, that's the way markets operate, but no crash. And in the long run, medium to long run, upward movement.
Jonathan, if you're advising somebody listening maybe who has to move or wants to move and they're holding on, what would you say?
I would say that house prices are going to crash. Therefore, why are you holding on?
Just wait and don't do it. Don't buy.
Don't buy. Can I please quote from the FT today, very quickly? Quote, "We have record personal debt, record low savings ratio, record personal insolvencies, record trade deficit, government borrowing out of control. The economy is not nearly in as good a shape as people have said already."
Thank you very much indeed. That's Jonathan Davis, Chartered Financial Planner, website housepricecrash.co.uk, and Gavin Davidson, a property investor, website propertyinvestmentmarket.com.